Hello and welcome to San Diego Market Watch, where we bring you weekly information on the San Diego real estate market. It is September 15th, 2022, and let's jump right into this week's numbers. So we are looking at the number of homes for sale here in San Diego County, and we are at the lowest point since probably looks like late June here. The number of homes for sale has been it's been gradually declining and gradually and steadily declining since the middle of July. And this decline in the number of homes for sale is basically driven by the steep decline in the number of new listings week over week since the end of June. We had a spike, a run up in new listings for a couple of weeks there, and that run up right there has been basically, that's what drove the number of homes for sale up. And then it's really been declining since, June 29th or so. We had a little uptick here at the end of July, but that uptick was eclipsed by a sharp decline. So the number of sellers that are coming to the market in San Diego County is still very low, and buyer demand has remained very steady. We did have a decline in pending listings at the end of August, and they have leveled out again. But largely they have been very steady all summer. So this indicates very steady buyer demand. I'm sorry, I'm pointing at closed sales. Here are the number of pendings, where yes, we still had a little dip here at the end of August. And the number of closed sales has followed suit. So buyer demand has remained fairly steady while the supply of new homes has been dropping. And of course, we were at crisis level inventory earlier this year. There were, less than 2,000 units on the market at the beginning of 2022. And now we're sitting up here at around 4,300 units. So that's quite an increase, but it's still far below what the normal has been in the San Diego real estate market. For context, let's think back to 2009, 2010. There were 12, 14, 15,000 units on the market at any given time. So 4,300 is not a lot of units on the market in San Diego County. And I suppose we are fortunate that there haven't been more units coming to market, because buyer demand has remained very steady. Some might even call it lackluster, but of course that is driven by interest rates, which we'll talk about now. And unfortunately right now, interest rates have crept up over 6%. The national average is now over 6% for the first time since 2008. And this is a result of several different things, primarily the Federal Reserve cranking up that prime lending rate in order to slow inflation. And I'll tell you what, it has worked to slow the inflation in the housing market. We hope this is helping, and frankly, I hope they stop, because if we get much higher on interest rates, it is really going to hurt the real estate market. This increase has already stung quite a bit. It's squeezed a lot of buyers out, and it's pushed median prices down, although median prices are still up from earlier this year. We'll get into that in a minute. So the 30-year fixed average here at 6.02% according to Freddie Mac. The 15-year fixed is at 5.21, so if you can afford the payments on that, that's a really good rate. And then the 5/1 ARM at 4.93. Now there are other options besides a 30-year fixed, 15-year fixed, and a 5/1 ARM. We have 7/1 ARMs, we have 10/1 ARMs, and we have some beautiful options if you are not in the jumbo category, called a 2/1 buy down, and we have another video about that you can look for. And we're going to do even more informational videos on the 2/1 buy down next week, because you can get into a 30-year fixed rate mortgage with a lower payment for the first 2 years, and then you can keep the same 30-year fixed mortgage at the fully amortized rate, or you can refi assuming rates have come down. So anyway, let's jump over here and have a look at median price. I mentioned that a few moments ago here. When that rate jumped up, the median price came down fast. And I would even tell you that when rates jumped up earlier this year, when we're talking about late May, early June, 8 or 9%, some estimate even as much as 12% of that median price increase that we had experienced since January of this year, 8 to 12% of that came right off immediately, just in terms of affordability. So right now, median price is sitting right where it was back in March. However, it is still quite a bit higher than it was. Let's go back here to the summer of 2021 when we were at about 750, 77. Oh, here we are at 735, 750, 770, call it. Right here in the summer of 2021, we were well below 800. So here we are in the summer of 2022, and we are sitting right at $800,000 in median price. And if nothing else happens with rates, if we don't get a huge surge in buyer demand, and we don't get a bunch of new listings, median price should remain fairly firm. Now, if other things happen, there's just no telling. Although there is just no evidence out there to suggest that this is going to plummet anytime soon. But certainly the rapid rise in median price, which was frankly unsustainable, has basically disappeared. So we are basically sitting where we were sitting in March of 2022. And frankly, that's not a bad thing when you compare it to where we were in 2021 and all the way back here to 2020 and 2019. Homeowners have experienced massive gains in home equity, and that's a good thing. So that's what's happening in San Diego real estate this week. If you like this content, please like, share, subscribe, comment. Help us out. Tell your friends. We want to get this information out to more people every single week. So thanks for watching, and we'll see you soon.